Hi, greetings. Welcome to BALAS Accountancy Special Classes. You have got just less than 5 days for your Cbse Ensuing Accountancy exam, board exam. Okay, just 5 days more. 5 number of my recent episodes, including this one, that is my episode number BSE 046, is meant for equipping you for this very exam. And company accounts issue of shares, I repeat, company accounts issue of shares is a very predominant chapter for you. This episode is one with an exclusive single sum consisting of pro-rata allotment of shares. I repeat, a single sum consisting of pro-rata allotment of shares. Of course, a very comprehensive one. It has got features such as 2 successive forfeitures of shares, reissue and that too partly reissued case, treatment of premium when the same is received and not received, etc. And also complete set of journal entries, bank account and the relevant balance sheet. Please listen to my lecture very attentively. As I already mentioned in the past, I am more particular about the contents in my videos than the technology I have adapted for bringing out my videos. So, as usual, let me switch gear to the sharing more of this episode. Thank you. Well, the sole question of this episode number BSE 046, company accounts, issue of shares. It has got multiple features, a comprehensive question. It has got pro-rata allotment and successive forfeitures, partly reissue shares, forfeited shares, that is share premium not received shares forfeited, and share premium received shares forfeited. And we are asked to do the journal entries, bank account, and balance sheet. Okay. Well, the question is like this. Suzuki Limited issued a prospectus inviting applications for 60,000 shares of ₹10 each at a premium of 30% payable as follows. On application, ₹3.50, on allotment, ₹5.50, including premium, on first call, ₹2, and on second call, ₹2. Applications were received for 95,000 shares and allotment was made pro rata to applicants of 80,000 shares. Money was paid on applications were employed on account of sums due on allotment. X, to whom 1,500 shares were allotted, failed to pay the allotment money, and on his subsequent failure to pay the first call, his shares were forfeited. Y, the holder of 2,400 shares, failed to pay the 2 calls and his shares were forfeited after the second call. Of the forfeited shares, 3,000 shares were sold to Z as fully paid, Z paying ₹8.50 per share. The whole of Y's share being included. Give journal entries, repair bank account and balance sheet. Okay, so let us grapple with this one. Let us encounter this sum, a very good sum. Although we have invited only 60,000 shares, the response is 95,000 shares. And they have decided 80,000 shares for pro-rata allotment. Obviously, 15,000 have been refunded. And the journal entry will be like this. First, when we receive, the entry will be bank account debtor to share application account. Okay, right. Application money received on 95,000 shares at rate of ₹350 per share. 95,000 into ₹3.50 means this amount. Now, let me cancel the application amount. So, share application account debtor as it is. This you should keep it in mind. So, second entry will be always as it is, the application money should be debited and cancelled. To share capital 2,10,000, to share allotment 70,000, to bank account 52,500. we have to summarily debit and cancel our share application money. To the extent we are eligible to take the share capital at this level, that means the application money that can be taken to share capital at this level, we will credit to share capital. That is 2,10,000. It is nothing but 60,000 into 3.50. Okay. And to the extent refunded, we can easily credit to the bank. Bank will refund it. How much it is? 15,000 into 3.50. How it is 15,000? Because 95,000 we got it. Out of that 80,000 only we are going to consider for pro-rata allotment. Obviously, balance 15,000 will be refunded. Okay. And the remaining amount we'll just place in the share allotment credit 70,000. That is nothing but 80,000 shares were pro-rata considered for the purpose of 60,000 allotment, means 20,000 surplus application money is there. That should be kept in share allotment account to be adjusted in future. 20,000 into 3 rupee 50 paisa is nothing but 70,000. Okay. And what's the next entry? Make the share allotment money due. Share allotment account data 3,30,000, to share capital 1,50,000, to security premium reserve 1,80,000. Well, my dear students, I'm reminding in this episode also, this is a revision class. I am not giving you the very basic lessons. I expect you know the journal entries basically. Okay. So hence I'm not going that deep into the basic structure of the journal entry. Okay. Fine. So share allotment account debit 60,000 into 5.50. They categorically told us at the allotment level, you are expected to give us 5.50 per share. That will constitute 2.50 towards your capital and 3 rupee towards my premium. So 60,000 into 5.50, debit them 3,30,000. 60,000 into 2.50, give a credit to my share capital 1,50,000. 60,000 into 3, 1,80,000, give a credit to my security premium reserve account. And the next entry is the withheld entry, the response. When shares are allotted on pro-rata basis, and that too when there is a default or there is a false scenario. Let me explain it in detail like this. Thank you. Well, in a pro-rata allotment sum, one of the important items is the calculation of amount not received during allotment level. Whenever somebody happens to fail or somebody is a defaulter. Okay. Or in other words, simple words, calculation of calls in area during allotment level is one of the most important items. Okay. So let me explain it to you in detail here. The response entry for allotment in this case is bank account data 2,53,500 to share allotment at 53,500. Allotment money received except on 1,500 shares of X. So we need to find out what's the amount not received from Mr. X, who is an allottee of 1,500 shares. The amount not received from X on allotment. Excess amount received from X on application, first we will find out. X has been allotted 1,500 shares. He must have applied for more shares because it's a pro-rata allotment. If shares allotted were 60,000, shares applied were how much? 80,000 into 1,500 upon 60,000. Because 60,000 shares have been allotted against an application of 80,000. Originally, it must have been 95, but we are retained 15,000 summarily. So 80,000 applications were considered for 60,000 number of shares pro-rata allotment. That being the case, this works out to be 2,000 shares. So the gentleman had applied for 2,000 shares. Hence, the excess application money received from him is how much? 2,000 shares minus 1,500 shares. That means 500 shares at rate of application money per share rupees 3.50. That means 1,750. Okay. That is the excess application money received from him. Now, amount due from X on allotment is how much? Proper way, 1500 into rupees 5.50, because allotment money per share is rupees 5.50. That is 8,250. Even if he has defaulted, he has not defaulted for this entire amount, because already to the extent of 1,750 rupees is lying in credit with the organization, with the company, on account of his transfer, surplus application money transferred while he was under allotment. He was under pro-rata allotment. Surplus application money transferred against his credit to the allotment is lying with us. How much? To the extent of 1,750. That is what this excess what we have calculated. Okay. So when we are reminding him for 8,250, even if he has not paid, he has failed only to the extent of 6,500 only, because 1,750 is already with us. The balance amount is the call scenario in respect of him. That we should keep it in mind. This calculation, please master nicely. This is the one of the predominant calculation in respect of pro-rata allotment. Now let us see how much money we received. Or in other words, let me explain to you how I got this amount. Okay, 2,53,500. Well, it is like this. Share allotment debit on becoming due. How much money we made due? 3,30,000. Okay. And already there is a credit at the time of transferring the application money to allotment. How much? 70,000. So that being the case, 2,60,000 is the net due, because the best expectation at this level is 2,60,000. We may make due 3,330,000 customarily, because number of shares allotted into per share allotment money comes 3,30,000 rupees. Okay, but we know that already 70,000 rupees is lying credit. Nobody will make a duplicate payment, is it not? So 2,60,000 is the best possible response we are expecting. However, this gentleman has not paid how much? 6,500. I already explained to you. So the net amount received is 2,53,500. I hope I am very clear to you. This is the amount made due. However, we know that the allotment account already credit is there 70,000. So the best response what we are expecting is 2,60,000 only. And somebody has failed for an amount of 6,500. Okay, even if 8,250 is his share of allotment, there is already 1,750 to his credit by way of transfer of surplus application money. So already 6,500 only we expected from him, that he has failed. So 2,53,500 is the response on allotment. Okay, bank account debtor to share allotment. You may ask why I have not used the word call scenario here. In fact, bank account debtor 2,53,500, call scenario 6,500, you share allotment 2,60,000 we could have shown, but it is customary that allotment level call scenario is not operated. That's why we have kept as it is. Okay. Without operating call scenario, we are proceeding. All right. Next one, make the share first call due. Share first call. Share first call account debtor 1,20,000 to share capital, because at rate of 2 per share. I have not written the narration. Okay, you manage it, right? Share first call account debtor 1,20,000 to share capital 1,20,000. Being first call money due on 60,000 shares at rate of rupees 2 per share. That's all. And response to that one, bank account debtor 1,12,200, calls in area account debtor 7,800 to share first call. Call has been cancelled. I need to explain to you how this calls in area has come 7,800 rupees. Right. It is like this. X standing defaulter 1,500. Okay. And Y newly joined defaulter 2,400. X plus Y 3,900. At rate of 2, 7,800. Let us get back to the question. What they told. X to whom 1,500 shares were allotted failed to pay the allotment money, and on his subsequent failure to pay the first call, his shares were forfeited. Why the holder of 2,400 shares failed to pay the two calls? That means indirectly, very carefully read it. We have to proceed systematically. As from progress, we have to make entries. Yes. We know that this gentleman is already a defaulter from allotment level. And why the holder of 2,500 fails to pay the two calls? That means first call he is also a defaulter, and this gentleman is a running defaulter. So this plus this, how many shares? 3,900 number of shares. That into 2, 7,800. Okay. So bank account debtor, net amount received, calls in area 7,800 to share first call 1,20,000. Here we are used calls in area account. If at all there is a specific instruction not to use calls in area, means what you would have done? Bank account debtor this much to share first call this much. Okay. So calls in area will not be opened at the time of forfeiture. Instead of calls in area, the respective call will be considered. Okay, that's a different story altogether. But here I'm using calls in area account. Amount received is 1,12,200. Not received, that is calls in area default amount, is accounted under calls in area 7,800. I'm cancelling this share first call. Okay. Well, so far we have accounted till the response entry of first call. Journal entries means chronological order we have to account. Is it not? So let's see what is the next event. X, to whom 1,500 shares were allotted, failed to pay the allotment money, and on his subsequent failure to pay. Till this moment we have accounted. His shares were forfeited. That means on his subsequent failure to pay the first call, his shares were forfeited. We already accounted till the response entry of first call. Now the forfeiture, let us take up. 1,500 shares. Okay, Mr. X. The journal entry will be share capital account debtor 12,000, security premium reserve account debtor 4,500, to share allotment 6,500, to calls in area 3,000, to share premium, to share forfeiture account 7,000. So forfeiture of 1,500 shares of X, rupees 8 per share called up. Let me elaborate it. It's like this. Share capital, why it is debited with 12,000? 1,500 into rupees 8 called up. Some students make mistake at this point. Never do that. Called up value, you don't take always 10. Yes. Called up value at this moment is how much? 8 only. The last and final call of rupees 2 is not credited in the books of account pending call, right? So 1,500 into 8, 12,000 has been debited. Now, security premium reserve account also to be debited and cancelled. Amount is 1,500, of course, rupees 3 per share, security premium 4,500. You may ask, why should I debit and cancel it? The rule says that in case the security premium is not received, such a security premium should be debited and cancelled in the event of a share forfeiture. How do we know we are not received it? Well, security premium has been attached with the allotment, and this gentleman has failed to pay the allotment money. Obviously, we have not received, and the rule is applicable. So one more debit. Now, credits. Share allotment has been credited with 6,500. Why? There lies a balance in the share share allotment to the extent of 6,500. How do we know? It has been already explained to you. This was the net due, okay, and we have received this amount. Obviously, this much balance in the share allotment itself. Normally, we would have transferred to the calls in area, but being in the allotment level, it is conventionally kept in the allotment level itself. So that amount we have to credit and cancel. Now the share allotment account is nullified. There is no meaning in expecting from somebody when he is kicked out, right? So that account is nullified, right? Now calls in area, 3,000 is credited. How? This gentleman has not paid the calls in first call of rupees 2. Okay. So 1,500 into 2, 3,000. That is also in the calls in area account. You may ask, where is the 3,000? In the 7,800, his amount is 3,000 only. That only we are cancelling. Okay. So that's all. Once again, Share capital, debit. Number of shares into called up value. Security premium, debit, since not received. Number of shares into security premium per share, 4,500. Share allotment credit, 6,500. Why? Because that much is there as calls in area in the share allotment account itself. So it is credited. When somebody's share is forfeiture, his account has to be nullified. There should not be any balance against his account, right? Calls in area, that also same case. Here only thing, categorically, we have kept the first call amount due from him in the calls in area account. That is also credited and cancelled. And share forfeiture, the balance amount 7,000. You may ask, if I write the 7,000, I'll get the answer. But how I'll check whether it is correct? Of course, it should represent the amount received from this gentleman. We can always check that. How is it? Application money, how much we received? 1,500 into rupees 3.50. That is 5,250. Is it not? Check. Is it not the fact? On application 350. So that is correct. Surplus application money 1,750 is also received. We have already calculated here. So this gentleman has failed allotment on first call. Means doesn't mean that only application money he has given. He has paid the surplus application money also. So total amount received from his side is 7,000. That has been given credit to share forfeiture. In fact, in the journal entry, we just write this balance amount, you'll get the marks, but it's always better to check it. Okay, so that's all about this forfeiture account. Well, what is the next event? Making due the second call. The journal entry will be share second call account debtor 1,17,000 to share capital 1,17,000. Here, please be utmost careful. We need to remain only to the extent of 58,500 shareholders. Why? Because 1,500 are already over. So we will be remaining to the extent of 58,500 shares. Okay. Those who have been kicked out should not be chased again further. They are not at all in the picture. The existing number of shares are only 58,500. So 58,500 into call value is rupees 2 per share. Final call value is rupees 2 per share. So 1,70,000. Share second call account debtor 1,17,000 to share capital 1,17,000. Now the response entry. Well, we are told that why the holder of 2,400 shares failed to pay the two calls. That means he has failed here also. Not only the first call, but in the second call also. 58,500 shares expected. Out of the 2,400 not paid, balance is 56,100. That into rupees 2, 1,12,200 money moved to the bank. So the bank is debited to that extent. And calls in area 2,400 into 2, 4,800. Okay. And of course, the share second call is credited and nullified. Fine. Now, what is the next event? Nothing but the other forfeiture, second forfeiture. This gentleman is also going to be kicked out. And the entry for his forfeiture is share capital account debtor 24,000. You calls in area 9,600. You share forfeiture 14,400. Forfeiture of 2,400 shares of Y. Let me elaborate it. Share capital, number of shares into fully called share. Okay. Well, please keep it in mind. We will never consider the premium part when we debit share capital. Okay. In fact, another premium amount 3 is there. That should not be taken into account at all. Only capital part will be considered in dealing with share capital account. So per share capital part was maximum capital, that is fully called up capital, rupees 10. So 2,400 into 10, 24,000. Calls in area 2,400 into 4, 9,600. How do you know? Because first call plus second call. So both the calls vary together 4 into number of shares. And the balance is share forfeiture. That is nothing but the amount received from him. The amount left behind by this unfortunate shareholder, Mr. Y. How much? He has paid the application money 3.5 and the allotment money 2.5 only you should take. You should not take the premium part. It counting share forfeiture. I already explained. Maybe allotment call value must have been 5.5. It includes 3 rupees premium. Net of that, 2.5 is the share capital part. So 6 rupees is the total amount as far as the capital part of it received and forfeited by us. So 2,400 into 6, 14,400. So that is the journal entry. Okay. Share capital account data 24,000. To calls in area account 9,600. To share forfeiture 14,400. I'm explaining, elaborating every entry so that when we deal with other similar sums also, why it is like that, you can always recall and apply your mind. Well, after the two successive forfeitures, what is the next event happening? Of the shares forfeited, 3,000 shares were sold to Z as fully paid. Is it paying rupees 8.50 per share? So it is nothing but reissue. In fact, there are more shares, 2,400 plus 1,500, 3,900 number of shares are there. But they could find or they want to issue only 3,000. So let us account for this reissue. 3,000 shares reissued at rate of rupees 8.50. The journal entry will be bank account debtor 25,500. How? 3,000 into 8.50. Share forfeiture debited 4,500. That is nothing. Per share loss on reissue is 1 rupee 50 paisa. 3,000 into 1 rupee 50 paisa, 4,500. And share capital came back to the extent of 30,000. 3,000 into 10. Okay. So that is the reissue entry. When we bag the money of the unfortunate shareholder, we credited to share forfeiture. On subsequent reissue, if we suffer, means that same forfeiture account will be debited. Okay. And after reissue, immediately you should strike in your mind, what about the capital reserve? Have they reissued full shares? No, they have reissued only partly to the extent of 3,000 number of shares. So capital reserve entry will be share forfeiture account 12,700 to capital reserve 12,700. Let me elaborate it. 3,000 reissue shares include the whole of shares of Y and the balance of X. So Y 2,400. He had only those many shares. X, how many? He had 1,500 shares. However, for reissue purpose, only the required 600 have been considered because total reissue was 3,000. So 3,000 minus 2,400, 600 of X and 2,400 of Y. Now, X, as far as X forfeiture income is concerned, the entire 7,000 what we had received, we cannot take into account. Okay. Forfeiture of 1,500 shares of X, rupees 8 per share called up, credited 7,000 forfeiture. But the entire 7,000 we cannot consider here because his shares are not fully reissued or his shares have not been fully considered for reissue purpose. Only partly his shares to the extent of 600 out of 1,500. So proportionately, amount received on forfeiture into number of shares reissued upon number of shares forfeit. So 7,000 into 600 upon 1,500, that is 2,800. Well, as far as Y is concerned, full. We had paid application money 3.5. We had received allotment money 5.5. It is subject to premium 3. So net 2.5 we had received from him. So 3.5 plus 2.5, 6 rupees per share, 2,400 into 6, 14,400 in respect of Y and 2,800 in respect of X. So total forfeiture income is 17,200. Okay. Out of that, loss on reissue has to be reduced. How much? Per share, 1 rupee 50 paisa. 10 rupee shares were reissued for 8 rupee 50 paisa. So 3,000 into 1 rupee 50 is related loss on reissue. That is 4,500. And hence the capital reserve will be this minus loss, that is 12,700. Okay, it's a case of shares are partly only reissued. So this is the calculation. Okay, hence the journal entry is Share forfeiture account 12,700 to capital reserve. Profit on 3,000 forfeited shares transferred to capital reserve. Well, we have concluded the journal entries part. Now, preparation of bank account. It's a very simple work. Just open the bank ledger account and post the journal entries involving bank account there. That's all. Very simple. This is the first journal entry. Bank account debtor 3,32,500 to share application account 3,32,500. That is how it posted here. Bank account debtor to share application account 3,32,500. As I go on posting, I'm changing the color of the entry. Okay. So that's all. Now, next one. Share application, as far as bank is concerned, 52,500. So, X account debtor Y is nothing but Y is credited by X. That's the rule of posting. Okay. So share application 52,500 to bank 52,500 is nothing but bank by share application 52,500. Just remember simple rule of this posting. X to Y is nothing but Y by X. X account debtor to Y is Y account is credited by X. Okay. Next one. Bank account debtor 2,53,500 to share allotment account 2,53,500. Okay. So this one over. Fine. Next. Bank account debtor 1,12,200 to share first call account. So compound entry. Only pertained amount we should take. Okay. We know the compound entry means split it properly and post it. Okay. So bank account debtor to share first call account 1,12,200. Next one, bank account debtor 1,12,200 to share second call 1,12,200. This also compound journal entry. Okay. Now next, bank account debtor 25,500 to share capital account 25,500. At another compound journal entry. Okay. So 25,500. Anything more is there? Nothing is there. So balance the account. Simple rule. Total the heavier side. This much it comes. 8,35,900. Put it across. Yes. Find the difference and indicate against balance carried down. If it is a credit side, by balance carried out. Had it been in the debit side, it would have been to balance carried out. So our bank balance is 7,83,400. That's all. Very simple. Well, now let us take up the balance sheet. Okay. All the journal entries consolidated, we have to show in the balance sheet. Okay. They asked only the bank ledger that we have successfully prepared, and all other journal entries should be consolidated and has to be placed in the balance sheet. Well, equity and liabilities, main head, shareholders funds only. In that, two subheads, share capital and reserves and surplus. And as far as assets are concerned, the main head is current assets and just a single subhead, cash and cash equivalent. And you are expected to prepare the notes to accounts also. In fact, you will be more comfortable in placing these amounts only if you come through the notes to accounts. So let us first prepare now the notes to accounts. Okay. Well, share capital. Authorized share capital, we don't have the information, so just show the question mark and close it. This issued share capital, it has been given as 60,000 shares were offered to the public, so that is issued one, 10 rupees, so 6 lakhs. This authorized share capital and issue share capital, these are all just reporting figures only, not to be added to tally the balance sheet. Okay, fine. Now comes subscribed and fully paid capital. 59,100 shares of rupees 10 each, 5,91,000. You may ask, how did you get this 59,100? Well, issued and subscribed 60,000 number of shares. First forfeiture We cancel 1,500 shares. Second one, 2,400. Now 56,100 shares. And of course, we reissued and generated 3,000. So 59,100. That is the background. Okay. 59,100 shares, fully paid up shares only. So 5,91,000. And please keep it in mind, when forfeited shares are not fully reissued, or in other words, when shares are only partially reissued, means there is bound to be a credit balance in the share forfeiture account, is it not? Such credit balance has to be a part of this one, okay? Or in other words, we have to add it here, and I find it is 4,200. How I got it is like first share forfeiture credit 7,000, okay? 7,000 a credit. So that I'm showing here. Second forfeiture 14,400. 14,400 credit. So that also I'm showing here. So now 21,400. Now let us see, there are two successive debits. One first debit 4,500 on reissue loss, is it not? So that I am reducing, and there is yet another debit. What is that? We have transferred whatever is possible to transfer to capital reserve by debiting share forfeiture 12,700. Okay, so that is yet another debit. So net result is 4,200 that I am showing here. Okay, so 5,95,200 is the subscribed and fully paid capital. Now reserves and surplus. Capital reserve will easily agree with me a single entry. Capital reserve 12,700. That I am showing here. Okay. Securities premium, two entries to be left together we have to show. On allotment, 1,80,000 were there. Okay. Securities premium 1,80,000. And we find on the first forfeiture, we have debited and cancelled 4,500. So that also I am showing here, right? So one credit and one debit, net amount is 1,75,500. Well, students, incidentally, I would want to mention one point which I had forgotten. It is that in the second forfeiture, we have not debited the security premium reserve account. Reason being, we have already received the share premium or security premium in this particular share, because this gentleman is defaulting from first call onwards only, whereas security premium had been attached with allotment, which he had already paid. The paid security premium cannot be debited and cancelled. Hence, we are not done it here. Okay, which I had forgotten at that time. I'm informing you now. Okay, fine. Now, so 1,75,500. That also we are showing here. So total reserves and surplus is 1,88,200. Okay. And cash and cash equivalents. Cash and cash equivalents 7,83,400 that we have successfully prepared a ledger. So very easy work. Okay. Now let us place now all this item comfortably. Equity and liabilities, shareholders fund share capital 5,95,200. Okay. Reserves and surplus 1,88,200. Okay. So total equity and liability 7,83,400, and cash and cash equivalent is nothing but the same amount. Okay. So a tally balance sheet. That's all. So we have done this sum in a comprehensive way. So a very comprehensive sum we have worked out. I hope it will be immensely useful to you, because from various angles it can be utilized. So many elements are involved in this particular sum. Well, it's very unlikely I will have yet another episode before your ensuing board exam. So I wish you all the very best. Take care of yourself. Thank you.